Welcome back everyone to weekly update video week 41, the week of August 12th. Well, today's August 12th. I have a wide array of things to have input on this week, and then there's the picks as always at the end. Bit of an interesting few selections to go along with that. So let's get right to it. So it seems we have already gotten to the point where I'm losing track of gold. I mean, it has moved very quickly, very recently. And it's just been kind of relentless, it feels, in its move. Now I know that when gold trends, it trends. And I've said this for a while, and for many years I've been a long-term gold bull. I think eventually it goes much, much higher. And I've had a big position in gold in this and in personal portfolio. But wow, we are overbought right now. The all basically all overbought, oversold indicators indicate overbought. The DSI is above 97. If you'd have told me it touched 100, I'd probably have believed you. By the way, for the peak in 2011, it was 92 at its peak. So that's daily sentiment index, I believe. Commitment of traders, extreme, extremely the equivalent of overbought, I guess. So commercials are quite net short. The chart fairly stretched. So my hope, the healthy thing for gold right now, for gold bull market, which I believe it looks like we're now in, would be some consolidation where we are, and not just rocketing higher. I think if we go sideways for a bit, kind of build in some support, and then maybe progress higher. I think that would be the most healthy thing to hope for longer term. And so that's gold. So the different markets are really all over the place. Now, I know there was a big drop, big rally last week. S&P kind of chugging along much stronger than many other markets. I mean, if you look at just looking at the price action, the sentiment did get rather bearish in the middle of last week, right about where it kind of started the bounce. So we'll have to see how long that bounce lasts and what goes on with the sentiment and things like that. As far as industrial metals, well, nickel forgot it was an industrial metal. It surged at one point like $2,000 a ton or something overnight last week when Indonesia, who's a big producer of nickel, was talking about banning exports. So that would do it. On the other hand, you have copper and zinc, which looked like they were trying to put in a base for a while and maybe head higher, but they both broke through the bottom of that. And I don't really love charting commodities because it's a bit different, but they moved lower. And so we'll have to see. Longer term, both of those have really intriguing supply and demand dynamics. Zinc in particular, I've been watching now for a while, looks very interesting. A lot of potential for volatility there, both in both directions, and that is one that I'm. It's one that I'm watching closely. Not as closely as uranium, but I'm watching. I'm interested in zinc. Let's put it that way. I don't have any pure zinc plays at the moment though. The rest of the world, equity is kind of similar to the S&P, but look slightly weaker than U.S. equities. So we'll have to see with this whole trade war, currency war, whatever. We'll have to see how that goes. There were a bunch of surprise rate cuts all around the world last week. I expect that to continue as the currency war progresses, which, well, frankly, is just more bullish for things like gold and hard assets, but we'll have to see how that plays out. Um, yeah. So there are a few thoughts I've been having on energy in general. Now, one is that energy in general seems to be the most ironically hated sector because, you could have all this technology, but without energy, you have pieces of metal or plastic or whatever, not even because you can't even make some of it. But yet it is hated, in markets at least. Recently, though, my most particular thoughts on the energy complex has been around oil, and it seems to me like oil has been weak, yes, but oil stocks have just been like obliterated. Like nobody cares, nobody likes. Now, in fairness, there's been the shale story has been a big reason for that, kind of all that supply ramping up really quickly. So anytime you get a price move, you just get that all those wells just come online, production just ramps up, then declines, and it's been a vicious cycle. It's honestly been a vicious cycle, and I haven't really been too big on oil through the whole thing, just because something exciting happens and it well, not instantly, but very quickly, you just have such a response and it just goes nowhere. And I've said for many times through the channel when people ask me about this or that or uh, oil deep sea exploration or different things, I said I've been looking for it to break before I really dive into oil and take positions and have a strong stance one way or the other. I'm not convinced it's completely broken yet, but when I look around the sector, I look at different things, and I think if you are on the outside and you're just looking in, you could start seeing, if you take a look, you could start seeing cracks. I think it can get significantly worse, and I think that if we start seeing some maybe some consolidation of shale, maybe some bankruptcies, maybe um, some some breakage in the marginal companies and some discipline, really, then I think we can finally move out of this vicious cycle of um, shale, um, which has been, or even if there's some discipline in the shale field, then it's less just burning through capital to get oil, debt. Something has to break, I think. Likely has to break unless we just run out of supply. But yeah, we might be starting to see the breakage right now, and we'll have to see where that goes. Now to the energy that you probably were hoping I would be talking about, and that is uranium. So the divergence between equities and fundamentals continues, and I did see some talk this week, recently actually, it was this weekend, on Twitter about how a possible reason for this is that the URA ETF, which continues to dump shares, lose investors, and arguably deservedly so because they kind of switched mid-game after they had lost the game, which game they were playing. But anyway, so as it dumps shares, it sells uranium stocks. And so whereas a year and a half ago, maybe 2 years ago, it would own $400 million worth of uranium equities, now it owns like $80 million. I think I saw that stat, which means that $320 million of uranium equities were sold into the market from this ETF. And in a time where there's not much enthusiasm in the space, not much catalyst, no price going up, that has hurt the equities. Now, it's not all bad news. A, price is going down, better buying opportunity for especially when capital moves back into the space. And that is where the second point comes in because there is a new ETF for, well, US-based ETF in the works. I think the prospective ticker is URMN. That is not, I don't know if that's final yet. I know it's tracking the URMNX index, which is pure play uranium. So again, I don't believe this is listed yet, but the prospectus is out and the index it's tracking. It's 17.5% physical, 15% Kazatomprom, 15% Cameco, 4.9% a bunch of smaller names, and then like 1% some really much smaller names. And while it's not exactly how I would have done an ETF, it's pretty good in terms of the balance, in terms of the allocation to different names. I would have, again, I would have done it differently, but that's for me. And for in general, from what the allocation of this one looks like, I think it's pretty good. I think it's probably about as good as could be expected. Again, it's still a significant amount of the big players, but it's less than most of the other options. It's more physical than I'd have had, but with this market caps, it's acceptable, I think. All in all, pretty good, pretty diversified way of playing uranium, in my view. And at a bit of a change of pace here, the market-related joke of the week last week, in my opinion, was when the US labeled China a currency manipulator because it stopped manipulating its currency. Yep, I laughed at that one. And in the meanwhile and everywhere else category, the bond markets continue to debate if they should tell the Fed, or if they are telling the Fed to cut another 25 basis points or 50 basis points in September. It is definitely a tough decision that the bond market, Fed, will make. And in Hong Kong and China, food prices are up. And now this was predictable a month ago, or sorry, months ago when you saw different things going on there. But it looks like it's finally taken hold. And on a similar note, I'd imagine that now is probably not the best time to be doing business in Hong Kong with all the protests. That is, unless you're selling masks and riot gear. But the point is, there's some problems out there, and they're not contained at, well, you're hearing less or not. They're popping up here and there, and in such major economic hubs, they can cause disruptions throughout the globe in terms of business, GDP growth, and just different things like that. So at a time when the global economy is slowing, these things are particularly uh, dangerous in terms of what they can contaminate in terms of stuff around the globe. So just I'm continuing to keep an eye on things like that and the knock-on effects that they might have. Okay, now some quick points on some of the picks for this week. First, Plateau. Okay, so let's assume they lose all of those concessions and they can't get them back. Okay, let's start pricing that in. Obviously, it sucks. Obviously, the previous management messed up. Shouldn't have waited to the last minute. And also, obviously, Peru is not in the most accommodating mood with companies. And you know what? They don't have to be. That's fine. I'm not being petty or annoyed here. I'm just saying that's what the environment is. And Plateau now has to deal with that. They have to, if they can make their projects still work at the size that they thought they could before, then, well, that'll probably involve trying to get those concessions back. If they can't, they'll have to find a new way around it. But at this point, the resource, the value proposition at this price still looks appealing. It's already decently sized position and not going to be necessarily buying it every week. I might, if it goes down, we'll see. If it's priced here, maybe continue to buy. But I just wanted to make a few points on Plateau in terms of where they're at now. And where they're at now, let's remove those 32 concessions and look at what they have and see, is there value there? And there honestly could be. The only other thing that I want to point out about Plateau is on lithium. Now, lithium, the stocks have been down a bunch. And does that mean they're cheap? Well, does that mean the lithium price is going to go up? Well, I'll put it this way. I'm not crazily bullish on lithium. I need to do more work on lithium for sure. But I think they're significantly cheaper than they were. However, I would take a very close look at what the supply response is going to be, which I still need to do that. I haven't done enough research on lithium to have a strong view, but I am probably more in the not bullish camp than bullish, but this is not new. This is a long time thing. I'm not bearish at this point, but if you look at the amount of lithium that's out there, I think the price can go up a little bit to incent some new production, but I don't think the price needs to go back anywhere near where it went before. Obviously, not a lithium expert here, but just felt like it needed to be said about lithium. I might talk more about that in a video, but rambled on about Plateau, so I'll put the other two picks on the next page. Okay, so pick number 2, don't really have much to say about this. Bannerman Resources under 3 cents. It's a pick. Uranium mining in Namibia sounds good to me. But anyway, the last pick, and this is a bit of a new one, and it's kind of, I've been watching this one for a while. I kind of looked at it a long time ago, and I'm like, cheap, but doesn't interest me. Looked at it more recently, I'm like, okay, really cheap, but I don't know. And now we're gonna nibble in the portfolio here on Bed Bath and Beyond, which has become kind of beyond cheap at this point. It has a market cap of what, $1.08 billion, has like 800, $900 million in cash. Its debt is all long term. It has an 8% dividend. It has free cash flow to more than cover that. Honestly, I know there's some out there that are saying they should just buy back as many shares as they can, which honestly at this price I wouldn't fault them for it, because I think that's a decent way to deploy the equity unless there's some problem with Bed Bath and Beyond that is hidden. Insiders recently bought $1 million worth of shares, and that's at what, 20% higher than the price currently is, maybe more than that. I don't know. It was like $10 or something, above $10. I don't remember the exact price. Anyway, we have Beyond Meat on one hand, which is, I think it's rather expensive, but who am I to judge? And then on the other hand, you have Bed Bath and Beyond, which is, I guess people are thinking it's a victim of the retail apocalypse. And I just think at some point, companies like Wayfair might actually have to make money. And when they do, when they can stop being funded by investors, giving them money to burn, that might be good for something like Bed Bath and Beyond. Now, does that have to be soon? Absolutely not. Could be decades, but for now, Bed Bath and Beyond still has a big cash flow and is a fairly cheap stock with a what 40 huge short interest that would take days if not weeks to cover if this thing ever turned around. And honestly, I could see this thing 3, 4 times the current price and not be expensive. I'm not saying it's ever going to go back to $80 or whatever it was, but $8.46 a share, $1.08 billion market cap for this company. It's worth a nibble. And that's it for this week. I know I have rambled in many different areas today, but I hope something was worth your time. And until the next video, I hope everyone has a great week and have good luck in the markets. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.